Hello, this is Mike Swanson of Wall Street Window. And last week was the Thanksgiving week for the markets. We had Thursday off for the exchanges, and Friday was a shortened day. Seasonally, historically, that week is the most likely week to be an up week in the markets, and it was indeed. In fact, the Wednesday before is historically the most likely day to be a green day for the markets. Uh, there's less liquidity in the markets, there's less selling in the markets. So people who want to buy, people who want to trade to the upside tend to take control of the week. And you have to remember that before that week, the markets had been in a nice correction since they peaked out in October. All markets just about made some sort of peak. Gold did, silver did, the S&P 500 did, and Bitcoin did. Bitcoin fell more than anything else, down over 20%, while gold, as you'll see in a second, actually outperformed the market. And that is a topic that I'm going to put out in my newsletter when it goes out Monday morning. This is a little bit of a preview of that. Let me show it to you because I want to show you the charts that are inside of it, because it'll show you what I'm talking about. This is a chart of gold, and gold basically fell to its 150-day moving average, or near it in October. But what I want you to notice is what I have on the bottom of the chart. This is a relative strength plot. What it does is take the price of gold divided by the S&P 500. When this goes up, it means that gold is outperforming the stock market. And if I were to go back, this only goes back 12 months, but if we went back 2 years, you would see that this has been going up substantially since gold cleared the $2,100 an ounce level, since silver cleared the $26 resistance level, which has been holding both back for over 2 years. Once those levels got cleared, this leg up began almost 2 years ago, which is continuing, and it's very powerful. And that's why when the momentum in the markets kind of faded out at the end of October and everything started to pull back, gold, once it hit its support level, once it stopped its pullback, then outperformed the S&P 500. That's why this relative strength indicator is up in November. That's why, because gold has been outperforming the market, silver has too, and you can see this triangle pattern, flag pattern. Will it be broke? I'm not sure, but we will see. One thing I will note, I said earlier when I started talking with you that the week of Thanksgiving tends to be historically the most likely up week of the markets, period. Well, the first week of December, as a result, tends to see a little bit of profit taking, and then it sets up for the Christmas rally. And I'm talking about for pretty much all markets here. But this relative strength thing is one of my favorite things to follow, because typically when the stock market pulls back, the sectors, the stocks, the asset classes like gold is doing that outperform, that don't fall as much as the S&P 500, tend to then lead the markets for the next 6 months, go up more than the S&P 500 for the next 6 months. So I think that's what gold and silver are going to do. Why does this happen? Because when the market pulls back, they're selling, obviously, causing the pullback. But when things don't pull back as much as the market, there is less selling. It means there's stronger hands. And it also means that people in the know when it comes to that sector, when it comes to that stock, are buying. They're using the dips as a chance to accumulate, while the masses and the people in leverage and a margin that are forced to sell are liquidating, because these people basically know something that they don't. They may be virtual insiders on a stock or a sector, and they know the outlook is going to be positive. So the gold crowd, they know that interest rates are going down, the Fed's going to lower them more. They know that the dollar's in decline, and they know that gold has risen up as a core store of value for central banks around the world. Over the past couple of years, they've been buying gold for the reserves as they've been letting some of their treasury bonds, come due, and just they're not replacing them. They're replacing them with gold. And that's what smart, I believe, big money investors are doing too. But anyway, the opposite of gold in the past 2 months has been Bitcoin, because Bitcoin has been among the worst performing asset classes, if you want to call it that, sectors of the market. Bitcoin ETFs were a manic fad last year. The masses piled into them, but now those Bitcoin ETFs are acting as toxic positions in people's portfolios, because when the market dipped in October, November, those ETFs fell dramatically by a factor of 3. And that hurts people badly. And that's why the relative strength indicator for Bitcoin is down. Now, what happens when something leads to the downside, you have to watch it very carefully for when the stock market rallies, because if it continues to lag, you're then looking at something that is poised to become a complete and total disaster going forward. It's likely in a bear market, and even if the market goes higher, perform dismally over the next 12 months. And I think Bitcoin is likely in that position because it's now trading below its 200-day moving average. And, when I analyze the markets, I look at that indicator. When you're in a bull market, a stage 2 bull market, typically that moving average, the 200-day moving average, acts as support. The market trades above it. We've been seeing gold do that for 2 years now, and it acts as support. When the market goes to that moving average, it's a great buy point. Stage 3 is an intensification in overall volatility, and the moving averages start to flatten out. Stage 4, the market slips below it, and the moving averages act as resistance. That looks like that's what is starting to happen with the Bitcoin. But as I said, silver is actually even more bullish now than gold. You can see that on the chart. Silver is closer to its October high. It retested the high already in just the other week, and now it's doing it again. And the relative strength is even more powerful than gold, and the mining stocks are acting in a similar fashion. So, if I own Bitcoin, and I don't, but if I did and I had losses on it, I would liquidate and take the tax loss and move that into something outperforming the market, which is you see gold and silver doing. And if I owned Bitcoin and did not have tax losses on it, I'd be looking to apply at some point before the end of the year, probably hedge it with puts. If I didn't want to sell this year, then I could be positioned to use the put position to liquidate next year. But either way, I'd be looking to get in and out of the crypto space one way or the other. I know that goes against what you're hearing just about from everyone else that talks about Bitcoin, because they're Bitcoin gurus that really push it, but I'm not such a person. No matter the market I am looking at, or no matter what I own, I always look at the trends and the charts, and that is what guides my decisions, not predictions of the future. And the trends when it comes to Bitcoin are undeniable, trading below its 200-day moving average, while just about everything else still remains above that level. If you look, let me sum it up simple. If you're in these markets, your goal, and you're managing this yourself or trading, your goal is to beat the market. The only way you can beat the S&P 500 is to be in those things that are doing exactly that. Simple as that. Now, if you want to get my next email update, I don't do videos like this for all my emails, but if you want to get the next one, you're going to want to go to WallStreetWindow.com, put in your email address, completely free, and you'll get all my updates. Like this video, so I'll do more of them. Know that they're appreciated, and I'll be speaking with you Later.